So in this video, we will discuss few questions on activity-based costing. The first question, Palmer Company uses an activity-based costing system. It has the following manufacturing activity areas, related drivers used as application basis, and conversion cost per unit of the driver. So here you can see different activities or cost pools that are given. And for each cost pool, there is a cost driver that is given, and the driver rates are also given. During the month, 100 units were produced, requiring two setups. So what does it mean? So totally, during the particular month, we produced 100 units. And for producing these 100 units, we require two setups. So for one setup, we produced 50 units, right? So we set up the machine for production. We produced 50 units. And then for the next 50 units, again, we have to set up the machine for production. Next, each unit consisted of 19 parts. And each unit used 1.5 direct labor hours and each unit used 1.25 machine hours for production. Direct material cost is $100 per finished unit. That is, for every one unit produced, we have spent $100 on direct material. All other manufacturing costs are classified as conversion cost. That is, see, here generally manufacturing cost is nothing but your direct material cost plus direct labor plus production overheads. So direct material cost is given in the question, $100. So this direct labor cost and overheads are usually known as the conversion cost. So apart from material, all the other production costs are conversion costs, your labor cost and overheads. All upstream and downstream business function costs are $140 and $320 per unit respectively. So your upstream cost is $140 per unit. So first, what is an upstream cost? Like any cost that is incurred before starting the production, like for example, research and development. And downstream cost is the costs that are incurred after the production. Like for example, marketing and advertisement expenses, all those things. So before production, upstream cost is $140 per unit and downstream cost is $320 per unit. What is the requirement of the question? The requirement of the question is to calculate the manufacturing cost per unit for the period. So as I already told, the manufacturing cost is nothing but your direct material cost plus direct labor and your production overheads. Direct material is directly given in the question, $100 per unit. Now we need to calculate the conversion cost per unit. Why conversion cost? Because the question clearly says all other manufacturing costs are conversion costs. So we cannot bifurcate between labor cost and production overhead separately because information is not available. So first what we will do is, see here we have the conversion cost per unit given in the question, that is $50, $50 per setup, and cost per number of parts, the cost per part is $0.5, and this is $26 per machine hour, $22 per labor hour. So the driver rates are given $12 per unit. So now what we will do is, during the period, totally we produce 100 units. So first we will calculate the total cost of 100 units. Then we will divide the total cost by 100 so that we get the cost per unit, right? So first let's calculate the total cost. See, first we will calculate the total setup cost. What is the cost per setup? It is $50 per setup. Okay. We produced how many units? 100 units. For producing 100 units, it required two setups, right? So for one setup, if it is $50 means the total setup cost will be 50 into 2 plus the number of parts. Cost per part is $0.5 per part. That is cost per part is $0.5. Totally we produced 100 units and each unit required 19 parts. So totally it is 1900 parts. The cost per part is, it is 0.5. So into 0.5 plus Totally we produce 100 units. Each unit required 1.25 machine hours. So 100 into 1.25. So totally our machines worked for 1250 hours. And the cost per machine hour is 26. So into into 26. So sorry, totally our machines worked for 125 hours and the cost per machine hour is $26 plus. Next, uh, the labor cost is $22 per labor hour and our laborers worked for 1.5 labor hours for 1 unit. So totally we produced 100 units and our laborers worked for 1 unit, they worked 1.5 hours. So for 100 units, they worked for 150 hours. And for each hour, we have to pay them $22. So I think this is the direct labor costs. So everything else is your production overheads. So setup, material handling, machining, and inspection. These are all your overhead costs. Whereas this is your direct labor cost itself. Plus um, number of inspection costs. For 1 unit, we spent $12. So totally how many units we produced? 100 units because the number of finished goods is the cost driver itself. So for every 1 unit of production, we have spent $12. So for 100 units, it will be 100 into 12. So we have to add everything. 50 into 2, we get 100 plus 1900 into 0.5 plus 125 into 26 plus 1500, sorry, 150 into 22 plus 1200. So totally we get 8800. So what is this 8800? 8800 is the total conversion cost. It's not TC, this is TCC. That is the total conversion cost is 8800. For how many units? For 100 units. So for 100 units, if your total cost is 8800, then for 1 unit, how much it will be? 8800 divided by 100, we get 88. So $88 per unit. So we have 88 as option A, but this is not the right answer because this is only the conversion cost. When I say conversion cost, it is only your labor cost and production overheads, or your labor cost plus overheads is $88 per unit. But we are supposed to calculate our manufacturing cost, which includes the direct material cost also. So direct material cost is $100 per unit given in the question, plus conversion cost is $88 per unit. So totally we get 188 as the total manufacturing cost per unit. So option C is the right answer. Question number 2. Which of the following statements about activity-based costing is correct? We'll go from option D. ABC is not applicable to the costing of services since it is more oriented towards the manufacturing environment. Option D is not the right answer because activity-based costing system can be employed in service sector also. It is not just restricted to manufacturing environment. So option D is not the right answer. Option C says ABC is a replacement procedure for and cannot be used in conjunction with a standard costing system. So ABC is a replacement procedure for standard costing system. No, ABC is not a replacement procedure for standard costing system. In fact, it can be used in conjunction with standard costing system. So option C is also not the right answer. ABC is not a replacement for standard costing. In fact, activity-based costing and standard costing can be worked, can be employed together. So option C is not the right answer. Look at option B. Implementation of ABC is more appropriate in a multi-product environment and it is of less importance where only one product is being produced and sold. Option B is the right answer. Why? Because see, for example, let's say we have two products, product A and product B. Let's say product A is a complicated product and it consumes more resources. Whereas product B is a simple product which consumes less resources. But product A is a low volume product. That is, you produce only 100 units of product A. But product B is a relatively high volume product. You produce 500 units of product B. If you are using absorption costing, what will happen is more overheads will be absorbed by product B. Why? Because in case of absorption costing, what will happen is The overhead costs are absorbed based on the production. For example, let's say in this case, we have two products, A and B. We are producing 100 units of A and 500 units of B. So totally how many units we are producing? Totally 600 units we are producing. Let's say total overhead cost, your production overhead is, let's say $1,200. So in absorption costing, what we will do? We will divide this 1,200 by 600 units. So how much do we get? Dollars 2 per unit, right? So for every $1, we are spending, for every 1 unit, we are spending $2. So what is the cost of, how many units of A we are producing? 100 units. So 100 into 2, we will absorb, product A will absorb 200, $200 of overhead, and product B will absorb $1,000 of overhead. This is what usually happens in absorption costing. But this is not the right way to do it. Why? Because even though product B is produced in high volume and product A is produced in low volume, but product A is a complicated product and it consumes more resources. Overheads are incurred not just based on the number of units we are producing. Overheads are incurred based on the resource consumption. So technically, more overhead should be absorbed by product A because it consumes more resources. But usually that will not happen in absorption costing. So in order to overcome this disadvantage only, we are using activity-based costing in a multi-product environment. In a multi-product environment, where one product is very complicated and it is consuming more resources, more overhead should be absorbed by that complicated product because that is the product which is consuming more resources. Whereas the relatively simpler product is consuming lesser resources, so lesser amount of overhead should be absorbed by the simple product, the product which consumes lesser resources. So implementation of activity-based costing is more appropriate in a multi-product environment. Whereas if you're producing only one product, in those cases, you can go ahead with absorption costing because there is no differences in the resource consumption between the products. Why? Because you're producing only one product, right? So activity-based costing, it is better to employ activity-based costing system in a multi-product environment. If the company is producing only one product, they can go ahead with absorption costing. Option A says ABC as a cost allocation procedure is applicable in all manufacturing environments, okay, regardless of the ratio of total overheads to other manufacturing cost elements. So this is the problem. The first part of the option is okay, it makes sense, but what they are saying was you can employ activity-based costing system in all manufacturing environments regardless of the significance of overheads. What does it mean? It means that, for example, let's say your total cost is $100, whereas let's say your overheads is only $10. So what is the percentage of overheads with reference to your total cost? Percentage of overheads is only 10%. That is 10% of your cost is overheads. Remaining 90% is your prime cost, like your direct material and direct labor. So in such environment, it is better not to apply or not to employ activity-based costing. Why? Because the significance of overhead is very less. So what we have to do is we have to calculate the ratio of total overhead to other manufacturing cost elements. If overhead is very significant, yes, you can go ahead with activity-based costing. But if the proportion of overhead is very less compared to your total cost, it is better not to apply activity-based costing. Why? Because see here, the total overhead is only $10. But if you are applying activity-based costing, you have to, it takes a lot of time and it is a costly system to employ. Just for absorbing this 10 units of, just to just to absorb this $10 of overhead, you have to take a lot of steps. Like you have to identify the cost pool, then an appropriate cost driver for each cost pool. Then you have to calculate cost driver rate. So it takes a lot of time. So apply activity-based costing only if there is a significant amount of overhead in your business. If the overhead is very insignificant, it's better not to apply activity-based costing. So option A is not the right answer. Option B is the right answer. Third question. The use of activity-based costing normally results in. Okay, so here they have given some options, but before that, I'll just take an example here. For example, we have spaces over here. So this is for question number 3. So listen, for example, let's say um, the company is producing two products, A and B. Uh, Units produced is equal to, let's say, 10,000 units of A and 10,000 units of B. Production per setup. Here, let's say 1,000 units, and here, let's say 5,000 units. So what does it mean? Production per setup, it is nothing but we set up our machines for production and we produce 1,000 units of product A. When we set up our machines for production, we produce 5,000 units of product B. So what is the number of setup that is required? So in one setup, we are producing 1,000 units of A. Then how many setups is required totally to produce 10,000 units of A? So it is cross multiply 10,000 by 1,000, we get 10, so not 10 units, 10 setups. Whereas for product B, in one setup, we are producing 5,000 units. So how many setups is required to produce 10,000 units? So we require only 2 setups. Now, here, which one is a low volume product and which one is a high volume product? Product A is a low volume product and product B is a high volume product. Now, the question is, to which product more overheads should be absorbed? Which product should absorb more overheads? Product A or product B? If we are using absorption costing, sorry. If we are using absorption costing, more overheads will be absorbed by product B. Why? Because more units are produced. So in absorption costing, overheads are absorbed based on the number of units we are producing. So product B is a high volume product. So more overheads will be absorbed by product B, whereas less overheads will be absorbed by product A in absorption costing. But if we are using activity-based costing, what will happen? In activity-based costing, overheads are not absorbed based on the number of units produced. In fact, in activity-based costing, overheads are absorbed based on the resource consumption. That is, if you look at both product A and product B, product A requires 10 setups, whereas product B requires only 2 setups. So which one is a more complicated product? Obviously product A, because product A requires more number of setups. So it is consuming more resources. So overheads are absorbed under activity-based costing. Overheads are absorbed on the basis of resource consumption and not just based on the number of units produced. So here, under activity-based costing, product A will absorb more overheads and product B will absorb lesser amount of overheads. Because product A is a more complicated product because it requires a lot, because it requires more number of setups. So it is consuming more resources. So a major portion of overhead has to be absorbed by product A under activity-based costing system. So what will happen is the high volume product will have lesser cost under activity-based costing system, and the low volume product will have more costs under activity-based costing system. Now read the options. Option A says substantially greater unit cost for low volume products than it is reported by traditional product costing. So obviously option A is the right answer. Why? Because see, in traditional costing, what will happen? High volume product, more costs. Low volume product, lesser overheads absorption. So that is what we did. We saw over here. Absorption costing means more high volume product is absorbing more overheads. Low volume product is absorbing lesser overheads. But in activity based costing, it is the other way around. The low volume product. So here you can see that substantially greater unit cost for low volume product. So in activity based costing system, the low volume product will absorb more overheads. As a result, it will have a greater unit cost. Why it is absorbing more overheads? Because low volume product, even though it is a low volume product, it is a complicated product to produce. It consumes more resources because it requires more number of setups. So option A is the right answer. Low volume product will absorb more overheads. As a result, it will have a greater unit cost than it is reported under traditional product costing. Option B is the exact opposite of option A. Option B says substantially lower unit cost for low volume product. No, even though it is a low volume product, it consumes more resources. So more overhead should be absorbed by low volume product than it is reported by under traditional costing. So option B is not the right answer because it is just the opposite of option A. Option C says decreased setup cost being charged to low volume product. Just now we saw no low volume product should absorb more overheads. So low volume product will have increased setup costs. Why increased setup cost? Because it is produced in low volumes. So you need more number of setups. So more setup costs should be absorbed by or it should be allocated to the low volume products. So option C is not the right answer. It should be increased setup costs and it should not be decreased setup costs. Option C says equalizing setup cost for all product line. Obviously, it is wrong. Why? Because see, option D says that equalize equalize the setup cost between product A and product B, which means, for example, if your setup cost is $1,000, allocate or absorb product A should absorb $500 and product B should absorb $500. But this is not the right way to do it. Why? Because you can do this if both the products are consuming same amount of resources and if both the products are equally complex. But in our case, that is not the case. One product is consuming more resources. One product is consuming lesser resources. So the product which consumes more resources should be allocated more overheads. So you cannot blindly equalize the setup cost between the product lines. The setup cost has to be allocated based on the number of setups it is taking for a product to produce. So option D is not the right answer. Question number 4. Oh, see, question number 4, it is exactly same as question number 1. The data given in the question is exactly same. What is the difference? The requirement of the question is different. Question number 1, requirement is to calculate manufacturing cost per unit. Question number 4, requirement is to calculate full cost per unit for the period. When we say full cost, the full cost is nothing but full cost per unit is nothing but your production cost per unit plus non-production cost per unit. So here we already calculated production costs from question number 1. So what is the production costs we calculated from question number 1? Production cost is nothing but the manufacturing cost. Manufacturing cost per unit we calculated from question number 1 is 188. So we already saw how to calculate the numbers. So production cost is $188 plus. What about the non-production cost? See, all these till this point everything is adjusted. We calculated the material. We calculated the setup costs, material handling, machining, assembly, inspection. All these costs are included in the production itself. While talking about the non-production cost, we have upstream and downstream business function cost. That is $140 per unit for $140 per unit for upstream and $320 per unit for downstream. So these upstream costs and downstream costs are your non-production costs. Like it includes your research and development costs, marketing and advertisement costs. So these are your non-production costs. So your non-production cost, your upstream cost is 140 per unit. So that needs to be added. Plus downstream cost is 320 per unit. So that needs to be added. So totally we get 320 plus 140 plus 188. We get 648. So that makes option A to be the right answer. So that is the full cost per unit. That is your production cost as well as your non-production cost. Question number 5. In an activity-based costing system, what should be used to assign a department's manufacturing overhead cost to products produced in varying lot sizes? Option A says single cause and effect relationship. See, the single cause and effect relationship is there in absorption costing. So in absorption costing, how do we absorb the overhead? So OAR is equal to overhead absorption rate is equal to your total production overheads divided by number of units produced. So instead of number of units produced, sometimes we take um, labor hours or machine hours also. So that depends. If it is a capital intensive industry, we take machine hours, or if it is a labor intensive industry, we take labor hours. However, there is only one cause and effect relationship. So what is the cause and what is the effect here? The number of units produced is the cost. So this is causing the cost to increase or decrease, which means if you produce more number of units, your production overhead will increase. So this is the effect. If you decrease the number of production, if you decrease the number of units produced, your cost will decrease. So there is a single cause and effect in case of absorption costing. But when we look at activity-based costing, we will have multiple cause and effect relationship. Option B is the right answer. How do we say we have multiple cause and effect relationship? Just look at this fourth question here. These are the different activities or cost pools we have, activities. And here we have the costs drivers, right? So these are nothing but the costs. If you increase the number of setups, machine setup cost will increase. If you increase the machine hours, your machining cost will increase. So this is the effect. Here we have multiple costs and multiple effect under activity-based costing system. So option B is the right answer. Our relative net sales value of the products, these are all something that we will never use in activity-based costing. In fact, this is something related to joint product costing. So option C is doesn't make sense. A product's ability to bear cost allocation. No. So these are some. So option B is the right answer. Multiple cause and effect relationship. Look at question number 6. Microbrew Northwest is a successful brewery engaged in the development and production of specialty microbrews. It uses an activity-based costing system. During the past year, it has incurred 12,50,000 of the product development costs, 8,50,000 of material handling cost, and 25 lakh of production line labor cost, and 7 lakh for production setup cost, and 5 lakh for power cost, and 15 lakh for manufacturing facility management. In an ABC cost hierarchy, so basically what they're asking us to calculate is what will be the unit level costs, how much is the total unit level cost, how much is the total batch level cost, and how much is the total product sustaining level costs. Then what is the total facility level cost? So what does it mean? The unit level cost is nothing but the cost that is incurred for every one additional unit that you are producing. Example, direct material. For example, let's say you want to manufacture a table. You manufacture the first table using 10 kg of wood. To manufacture the second table, you need another 10 kg of wood. Right? So that is a unit level activity. So unit level activities are those activities that is undertaken for every one additional unit that you are producing. Then we have batch level activities. Batch level activities are those activities that are undertaken for every one additional batch that you're producing. Example for batch level activity could be setup, because for every one unit you will not incur setup cost. You will incur setup cost for batches, right? That is, you first batch you will set up your machine for production. You will produce in batch. That is, in one batch you will produce 100 units. Then for the second batch again you will incur the next level of setup cost. So batch level activities are those activities that is undertaken on a batch basis. Example is setup. Product sustaining is nothing but any cost that is incurred just because of producing one particular product. And facility level is just because of example of facility level could be your security guard, the salary paid to your security guard. It is not related to production. It is not related to the number of units that you're producing. You're making payment to the you're paying salary to the security guard just because he's taking care of your facility. So just because of having a business, you are incurring this cost. So what we are supposed to calculate is, we are supposed to calculate how much is the product sustaining cost or total unit level, process level, or plant level cost. So first we have during the past year it has incurred 12 lakh 50,000 for product development cost. First, what is this product development cost? 12 lakh 50,000. It is a unit level? No, it is not incurred on a unit level basis. Is it a batch level? No, but it is a product level cost or product sustaining level. Why? Because see, you have spent dollar 12 lakh 50,000 just because of producing the product. If you're not producing that product, you're not going to spend the development cost. So this is a product level cost or product sustaining cost. So 12 lakh 50,000 is a product sustaining cost. Then what about 8 lakh 50,000 of material handling? Material handling will be a batch level cost because you will not handle material on a unit basis. Usually, that is, you will not carry 1 unit of material every time. You will carry material in batches. So that is a batch level cost. Material handling is a batch level cost. Then, so here we have 8 lakh 50,000 batch level. Then 25 lakh of production line labor cost. So this is a unit level cost because it is a labor cost. So usually unit level cost is like your direct material and direct labor. For every 1 unit that you're producing, you have to pay money to your labors. So that is a unit level cost. So 25 lakh is a unit level cost. 7 lakh for production setup cost. Again, this 7 lakh is a batch level cost. Why? Because as I already told, setup will happen on a batch basis, not on a unit basis. 5 lakh for power cost. Again, power cost can also be, it can be a unit level cost. Why? Because if you're producing more number of units, your power cost will increase. If you're producing lesser number of units, your power cost will decrease. So this is also a unit level cost. And 15 lakh for manufacturing facility management, as I already told, like the amount that is paid to your security guard. So just because you are spending 15 lakh just to maintain your facilities, just to maintain your factory. So it cannot be related to the number of units you're producing or number of batches, or it cannot be related to any product also. So these are your facility level cost. So here we have 12 lakh 50,000 of product sustaining cost and totally 15 lakh 50,000 of batch level cost. Your batch level cost is production setup cost 7 lakh and material handling cost 8 lakh 50,000. So that makes option A to be the right answer.